Welcome to this special webcast. We thought we should go on for a little longer because it is a complicated world and it's changing very rapidly. As we've been telling you in recent weeks, markets have been going up because they're printing a lot of money, they're loosening money, there is more bank lending available. We see that in China and the rest of Asia, where at last they're getting over their troubles with high inflation and they're moving to lower interest rates and they're encouraging more bank lending. We see it in the United States of America, where the recovery is gaining a bit of momentum and the banks seem strong enough to be able to carry it forward and to make sure there is enough money in circulation. And in broken Europe, where of course it's been hard going and very difficult, the sudden huge injection of money into the banking system took the very rough edges off the situation. People are now expecting a lot more. They think the European Central Bank is going to have to give even more money to those banks. But there are some negatives around which we're constantly pondering. The worst negatives remain in Europe. We see most of the southern countries in recession. In the case of countries like Greece and Portugal, persistent and long recession, doing a lot of damage to their economies. And there are still dangers for the euro. The Greek borrowing has not proved easy to organise. The Portuguese borrowing may not prove easy to organise. There's still a lack of political grip to try and see themselves through the crisis. So you've got this struggle going on in markets. There are still some people around who are saying it's all very dangerous. The euro could go wrong. The banks, particularly in Europe, are still very broken. There's only so much the authorities can do by throwing money at it. There is going to be a recession. That is going to mean lower earnings and maybe less dividends. But the bulls are saying the authorities now really mean business. They've understood just how long and deep this Western crisis of capitalism proved to be from 2008 to 2012, and they're now prepared to do more or less anything it takes to try and get some momentum into their very damaged and torn economies. Now, they may not succeed in southern Europe, but that liquidity has to go somewhere, and the markets are hoping that all that extra money is going to carry on finding its way into share markets as well as into bond markets. They're hoping that we're at last going to get a sustained period of rising prices. We think the sensible investor still goes where the underlying reality is better. That's in Asia and the emerging markets. They are going to get a lot richer whatever happens, even if the West gets into great difficulties, and they will get richer more and more by selling to themselves and selling to each other. Their export markets may be troubled to Europe this year, but there are an awful lot of richer Chinese to sell to, and the Chinese can export to the other parts of Asia. That's going to be the story of 2012.